I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik. He's the president of InsideTrack.com. Welcome back to the show, Eric.
Thanks for having me back, Jim. My pleasure to be here.
The Dow Jones is above 21,000 for the first time as we speak. What does that mean for people watching the equity markets?
Well, I definitely think that we are in the latter stages of this multi-year bull market. And one of the topics that I've talked about for years is a pretty uncanny 17-year cycle that I've described in particularly in the equity markets, but it's also impacted gold. In fact, last year, 2016 was a full 17-year cycle from the 1999 low in gold. That was one of many reasons why I thought that gold was poised for a multi-year bottom, and that 1999 low was linked to a 1982 low, and so this 17-year cycle impacts a lot of the markets. But since the early 2000s, I've really documented how it has had such a profound impact on equity markets in general. And it was interesting, in 2007, I did a series of articles on it, which it happened to coincide with the 17-year cicadas coming back from underground in the Midwest, where I'm at. So it was also an intriguing correlation that this 17-year cycle has moved in lockstep with that. Not that I'm trying to draw a causal relationship, just that there are these natural cycles that continually recur, and so I have even described that 17-year cycle as having multiple broods, kind of like you have different broods of the cicadas that come up at different periods of time. And the one that I was describing for 2007 that was auguring a 1 to 3 year 35 to 50% drop in the market was kind of placed in between another very consistent 17-year cycle that peaked in 2000, in late March of 2000, and is scheduled to peak again, ideally, if it's going to be real precise, in March of 2017. And that you can trace that 17-year cycle back to an intervening high in 1983, and that goes back to a major high in 1966, and before that it flips to lows, and you'd have to see my cycle progression diagram to see why cycles will usually alternate between 3 to 4 lows before they then invert and then govern 3 to 4 highs and then invert back under. But if you go all the way back to the major 1932 low, the Great Depression low, and move forward from there, you see a low in 1949, then it flips to the highs in 66, 83, 2000, and now 2017 is the next phase in that. And you can even go back, I'm jumping around a little bit here, forgive me for that, but I've diagrammed it all in some reports that I did over the last couple of years. But you can even go back to 1898 and 1915 and see significant lows. So you had that 4 low progression and then it flipped to what should be four highs, the first one being 1966, then 83, then 2000, then 2017. So that has just been an uncanny cycle in the equity markets, and I'm looking for it to take hold again in 2017 and produce a fairly significant top. There are some multi-year upside wave targets and other price objectives, some extreme upside targets that I look at on a monthly and yearly basis, all of them converging around 21,600 to 22,000 in the Dow Industrials and at approximately 2465 to 2531 in the S&P 500. And there's another range of numbers in the NASDAQ 100 that doesn't have quite as much synergy. It's spread out a little bit more, but the majority of those targets are at 5415 to about 5600 in the NASDAQ 100. So if those targets can be hit in this coming month, in the month of March, coming exactly 17 years from that previous major peak, it would be a very noteworthy squaring of price and time objectives, and a time to really start looking for signs of a top and potential reversal lower.
Eric, it sounds almost like the quarterly business cycle doesn't make any sense at all. They should be looking at your 17-year cycle.
Well, those cycles like I'm talking about, these 17-year and the 40-year cycle that I've talked about, are a much broader, much bigger scope things. So obviously, with the way the markets and trading is today, you still want to be paying attention to quarterly stuff. You want to be paying attention to monthly swings, because there's a lot of opportunities in between there. I certainly would not be recommending trading just off of a 17-year cycle per se, or even something like in these reports I did, I was describing some other pretty large-scale cycles that also converge in 2017, and one of those is a decennial cycle, a 10-year cycle, that has timed some sort of panic in 13 out of the last 18 decades, and it's always in the 7-year and often carrying over into the 8-year. So something like that too is soon to come into play. But I certainly focus on daily and weekly indicators and trends and signals to try and position myself into those larger trends. So I think they're all very important.
What's your outlook for the Canadian dollar, which has maintained about 75 cents US over the past few months? And I remember last year, because the Canadian dollar was so low, fresh produce prices were outrageous in the supermarket. $8 cauliflower, everybody keeps citing as an example. This year we haven't seen that. Should we be looking for a lower loonie?
I still think that there is a retest of the early 2016 lows on the horizon. Last year, well, even going back to 2014, 2015, I described longer-term cycles, why I thought that three key markets, the Canadian dollar, crude oil, and the Russian ruble, all of which were, the two currencies very closely tied to energy prices, all of them were projecting a sharp decline from mid-2014 into early 2016. But with the Canadian dollar, I elaborated on some longer-term cycles, really did some work going back over the last 50, 60 years with the Canadian dollar, and patterns that it has shown on a larger scale basis and a consistent series of 10 to 12 year declines following major peaks in 1957, 74, 1991, and 2008, which, if you will do some quick math there, you'll see that they were perfect examples of the 17-year cycle as well. But the ensuing declines were pretty consistent in their duration. And along with a lot of other work, I was explaining why I thought that the Canadian dollar probably wouldn't see a major multi-year bottom until early 2018. And that still remains my outlook, and I've had some trend indicators and signals corroborate that. One of my key 1 to 2 year indicators is a monthly trend confirmation signal that I use. And when we rebounded in the Canadian dollar late last year, that indicator stayed neutral to down. And so that was signaling that we still were in that larger degree downtrend, and that as long as the Canadian dollar held resistance at between 77 and 78 on the upside, that it was still primed for a drop back to its lows at some time over the course of the coming 6 to 12 months. So all of that remains intact, and that test of around 77, 77.50 was just a test of very consistent resistance in the Canadian dollar, and just reinforces that the downtrend remains intact, and that the analysis for a final low to wait until late 2017, early 2018 is still the governing outlook that I have.
We'll have more with Eric Hadik right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Eric Hadik. Eric, gold stocks have gone down while gold maintained its price more or less. What's the story there?
Well, that's a divergence that is so common. It's amazing that so many traders still get so baffled by it. And, you know, for starters, you have to realize that one is the price of just the metal, which is, you know, the resource that those mining stocks, those companies are involved with. But there are so many additional factors that impact the price of a share of a gold mining company that it would be ludicrous to expect them to move in lockstep. You know, it's almost like if the price of baseballs go down, does that mean the price of baseball salaries go down? And obviously that analogy has a lot of holes in it, but it's just that idea that just because gold is the commodity that those shares deal with does not mean that's the sole determinant of their their share price. And that's why I continually stress that you have to analyze the two, the metal and the shares, separately. And yes, when you have a big trend in force, the two will move in fairly close lockstep. But even you go back and look at the major tops and bottoms, they're usually separated by 6 to 12 months or more between the metal and the share indices, the XAU, the HUI. And that's because there are many different factors. And so it kind of baffles me sometimes how often I get asked, well, wait a minute, why is the XAU heading down if gold's still heading up? Well, the XAU had different factors. I did a special alert back on February 8th and devoted a couple pages of it just to the divergence that the gold mining indices were showing and why all of my work was projecting a February 8th or 9th top and a significant sell-off in those indices into, ideally into February 28th to March 3rd, where we're at right now, this 3 or 4 day time frame when the next intermediate cycle low was a higher probability. But at the same time, the precious metals prices and what they were showing on the charts were indicating that they still had additional upside price potential into early March. So you have these divergent factors which have played out since that analysis and since that early February peak. The mining shares did peak right in that February 8th, 9th time frame and have sold off pretty significantly even as gold and silver continue to forge ahead. They've got specific upside objectives that they're now getting closer to, both in time and price, but that they have not fulfilled even as those gold mining indices had already reached upside targets. The gold bugs index, the HUI, was showing some relative weakness when compared to the XAU. And there's another critical factor in there too when I look at my monthly trend indicator that I mentioned when I was discussing the Canadian dollar. It looks different in the precious metals compared to the mining shares, and the really noteworthy conclusion of that is that monthly trend indicator signaled a 3 to 6 month or longer bottom in gold and silver back in December, but with respect to the mining shares, it signaled a 1 to 3 month low, but it could not turn positive, so it's leaving open and even increasing the possibility for a drop back to those December lows in the mining shares. So there again, we could see, just as we have seen at most of the significant turning points, we could see a lag between when gold and silver set their price low and when the mining shares ultimately set their price low. So it would not surprise me at all to see the mining shares go back down to the December lows and probably spike below them, even as the price of the metal may pull back, but I would expect it to hold above the December lows in gold and silver.
We'll have more with Eric Hadik right after this.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Eric Hadik. Eric, how do these cycles affect the price of crude?
Crude has been in a bottoming phase since that early 2016 low. But I'm not expecting it to retest those lows. I think that is when I had expected a multi-year bottom in crude. So I think that right now it's in a 1 to 2 year bottoming phase. I believe we even had some interviews about this in early 2016 where I said that I thought it would take a couple of years for a bottom to really trace out, and I think that's still the case where crude is concerned. I'm looking ahead at late 2017 and into 2018 when I think that there's a much better chance for a bull market to resume. But there are specific price indicators that I need to see corroborate that before I would become very confident in an outlook like that.
Is oil harder to predict because it's so much easier to just turn taps on and off than other resources like mining?
I don't think so. And when I am, from a fundamental perspective like you're speaking about, that may be the case. But when you're dealing with technical analysis, charts and cycles, you pretty much treat them all the same, and it is just specific chart formations. Now, I know that a lot of antagonists towards technical analysis will kind of question how some lines on a chart are going to tell you much, but I always kind of respond to that with the idea of, okay, how does a doctor or a surgeon who's looking at lines on that EKG readout or EEG readout or a lot of other tests, or how does a seismologist looking at all the lines and squiggles on a earthquake chart, how's he able to determine anything? Well, those lines represent what's going on. Even though they are just lines on a chart, once you begin to understand what they represent, then you realize that they're revealing fundamental switches and transitions even before many of those fundamentals hit the news. That somebody has to be in the know about certain shifts, and that they are usually placing their bets in the markets or hedging production or future purchases, whatever the case may be. And so that shows up in the markets and shows up on the charts much sooner than it does in the news media. And so all of these markets have similar patterns that I watch for, and when they start to unfold, it starts to reveal some accumulation of certain resources or shares, or the opposite, some distribution near a top where all of a sudden you're starting to realize that there's repeated bouts of selling going on, and it's just a matter of time before the masses suddenly recognize that and all try to head for the exits at the same time. So crude to me is pretty similar to analyzing gold shares as it is to analyzing soybeans, as it is to analyzing treasury bonds, treasury notes, or stock indices.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim.
My guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.